Good afternoon, ladies and gentlemen. Good afternoon. Hope that you can hear me. Hope that you can see the slides. If you're in, if you could just let us know, we'd really really appreciate that. As always, welcome to Paul's Monday Market Update number 214 for Monday, the 9th of February 2026. Hope you're all well. Hope you've had a good weekend. I certainly have, which basically consisted of England winning Six Nations, United winning, and Liverpool losing. So it was pretty much a trifecta of great results for me there. Okay, so that sets us off for a good start to the week ahead. But wherever you are, hope you've had a good weekend. Hope you're ready for what is going to be an interesting week, another interesting week in the interesting year that we find ourselves here in 2026. If you are joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can possibly share with you over the next 25-30 minutes, looking at strength and weakness within FX indices and commodities markets, having a look at some charts of interest, okay, that you might want to add to your watch list, and then also basically a look at the live markets. It is not a signal service. It's not trade recommendations. It is me sharing what I'm looking at, which you may wish to add to your watch list as well. As always, you are very welcome here, but just remember you're always responsible for your own trading decisions. And if you want a bit more education, so 2 o'clock this afternoon, I'll be running the Active Trades Monday Market Matters webinar that I'll be talking about in terms of the education element. We'll be looking at what asset class should you trade. You can, if you want to join us for that, you're very welcome. You can do that through either the Active Trades website or that QR code there that will take you there. And if you want a bit of help and support in your own trading journey, you can join the VTP Trader Accountability Group. Doesn't really matter what you trade or how you trade. It's all about building discipline, accountability, and consistency in your trading endeavors. You can either ping me if you've got questions, or you can use the bit.ly code or that QR code there. It'll take you towards where there's some more information. Okay, all right, let's dig into the main thrust of our session. So as always, I start with the STAM. All right, if you're new to trading or new to joining us, this might look a little bit overwhelming or intimidating. It's not really once you get an understanding of what it's representing and how it helps us. It is just a snip from the work that I do every weekend, looking to identify where's the strength and where's the weakness within FX indices and commodities markets. Because I find when I do that, then it helps me basically plan and manage my week ahead in terms of where I want to focus my time, energy, and resources. So, what is it telling us, and how do we utilize it to help us? So, here we are. We're into week 7 of the year already. Okay, here we are, the 9th of February. Where's the strength and where's the weakness? Well, what we have is Aussie dollar remains top of the pile there. Okay, as it has done all the way through 2026 so far. Swiss franc, okay, is also in second place there. That kind of is it's interesting for us for a couple of reasons, because normally you would expect Aussie dollar to be a very risk-on currency, Swiss franc to be a very risk-off currency. Okay, so when you've got both of those at the top of the pile, you're getting a bit of a mixed message about whether we're risk-on or risk-off. It depends upon what particular instrument you look at and what timeline. But it is, as I say, unusual to have both a risk-on and a risk-off currency right either at the top of the pile or the bottom of the pile. Refer to where we're at the bottom. Well, of course, we've still got the US dollar and Japanese yen at the bottom of the pile. Now, of course, with regards to Japanese yen, we had the Japanese elections yesterday. LDP party with Mr. Takichi, the Japanese Prime Minister. She won effectively a super majority. Okay, so you can read into that what you want, all right, in terms of her attitude, her way of behaving. I've heard sort of called as the kind of Japanese Margaret Thatcher, the Japanese Iron Lady. Make of that what you will. But really, ultimately, as traders, all we're interested in is, how is that going to impact markets? And certainly, what we saw was a Nikkei, yet on Friday and then into the start today, certainly started off very bullishly. And we'll be interested to have a look at, well, actually, how's that impacting the Japanese yen immediately, but then going forward. Dollar has had a little bit of a kind of sort of an interesting week. We kind of swings a great deal, okay, and there will be undoubtedly elements of that Japanese election that will have an impact based upon what Ms. Takichi does in terms of whether she really goes for the kind of expansionary fiscal policy she had alluded to, and the impact that will have upon certainly like US Treasuries and US market investment, etc. But we'll get a grip on that as those events unfold. Certainly, when we started this week, just looking at the kind of the market performance, all right, since we opened last night, it has certainly been a kind of a dollar selling day. Okay, we've had basically Swiss franc and euro being strong there. Okay, and Japanese yen. No surprise there, really. There's always a bit of a relief rally after an election when especially when there's been such a strong a strong result. All right, then you always get a bit of a relief rally. Not unsurprisingly, okay, even though dollar has been weak, sterling has been the weakest currency against there. Okay, where we are here is we're sort of sitting here, okay, in the middle of the pile, all right, which has been where for most of 2026. Of course, for those of us here in the UK, we're dealing with the sort of well, how can you describe it really? The sort of hokey cokey, in a bit, out a bit, sort of shenanigans of Prime Minister Starmer. Okay, so he's already lost McSweeney, his sort of chief of staff over the weekend. Then I also understand his communications director has resigned this morning. That's his fourth in 18 months, I think I read. You can read into that what you will. Last night there was an announcement that he was basically going to be coming and speaking to the nation today, which, as of speaking now, I understand he's now reneged on that. He's flipped on that, and he'll be just talking with the members of his party. Listen, it's going to be interesting to see what happens there. Lots of people are telling me that he could be gone. We could have an interim prime minister by the end of the week. Whether he kind of looks to hold on. Personally, my own view is that I thought he would do everything he possibly could to try and hold on until the XAGUSD deal is sorted, because I think that's his pension for him and McSweeney and Hermer and Sands and Mandelson, etc. They were all making a good bit of money out of it. And that might be my sort of kind of cynical old man view and stuff, but I've been around the block long enough to sort of see treachery when it when I see it. All right, but anyway, the important thing is, how is that impacting markets for us? Well, gilts. Okay, gilts did push up this morning. Okay, because of course, if Starmer does go, well, the sort of the smorgasbord of talent that basically is available to replace him is thin. All right, it's a thin gruel, shall we say? So that's what will upset markets. And so gilt yields did raise, okay, a bit this morning, but not actually massively more than I'd say happened across a lot of global global central bank bonds, etc. So we will see what happens to that with unfold. Certainly, Sterling had a weak morning. Okay, it was a bit of a mixed morning. Okay, it was kind of an interesting morning there in terms of sterling. Not unsurprisingly, as the story unfolds, so will invariably the impact upon sterling and gilts and the FTSE. So certainly this week, okay, if like me, you're a big sterling trader, you're going to want to be keeping a very good eye on the markets and a good eye on the order flow. Euro is in the middling of the price as well. There, okay. Euro has done okay against sterling because, of course, sterling is sort of getting dumped, right? So not a real shocker there. When I look at sterling, okay, most of it is in what I would call selling environments. There, still some of the Aussies in buying environments, okay, on the swing basis. So that's not a real massive surprise. When I look at the kind of indices and commodities, from where we were a couple of weeks ago, where it was literally all green, giddy green. We can start to see there's a bit of a change there. Interestingly, NASDAQ has actually been a tactical short, which we'll look at in a moment. All right. Not unsurprisingly, Nikkei still remains a strategic buy. FTSE still remains a strategic buy, along with ASX and oil. Interestingly, Bitcoin, okay, Bitcoin went to a strategic sell there, okay, which we'll look at in a moment. The VIX on Friday, it had popped up above 20, which would, start to get me concerned, but it ended the week beneath that. Whether that will continue is we will see. We've got quite a bit of data coming out this week. Of course, last week we got knocked about a bit with the shutdown, so of course that has invariably that had an impact on some of the major data for the US market. So, for example, NFP, which should have been on Friday, that's now coming out Wednesday afternoon. I think there's sort of delayed CPI data as well coming out later on this week. Okay, certainly there's you've got jobs numbers which are expected to be weak. You've also got retail sales for the US tomorrow. That's going to have that'll have an impact. You've also got I think we've got we've got, just looking here, got unemployment claims, and then CPI on Friday for the US, and we've got GDP for the UK out on Thursday morning. Okay, so there is a bit of data, but personally I think certainly for the UK that kind of let's say the formal economic data will be overwhelmed by whatever goes on politically. Okay, that will be the sort of the major element of it. So, as always, it's going to be an interesting week, plenty going on. So as always, as you hear me say, make sure you're managing risk, make sure you're on top of the order flow, make sure you're on top of the news flow. All right, okay, and as always, keep your finger on the pulse. All right, as we go into these kind of interesting weeks. All right, let's switch across and have a look at some charts of interest then, okay? Some charts that are going on, because as I said, we've got quite a few earnings coming out this week as well. So if you'll just bear with me, I'm going to switch across to the charts. So just bear with us for a moment, ladies and gentlemen. Let's do that. All right. Okay, so I'm hoping that you can still hear me okay, hoping that you can still see the charts. This is the chart of interest for AXOn Enterprise. Okay, you score more points if you know who they are or what they do. But if you don't, that's why you're here, because AXOn, this is a weekly chart. All right, AXOn Enterprise is effectively what used to be Taser. Taser used to be, well, it still is. Taser is the kind of what do they call, like kind of like a non-violent gun, the electronic gun that you see in sort of police videos, and they get shot and you get electrocuted and stuff by it. So I would take a bit of an interest in this. One of my good friends used to work for them. He used to be a sales guy for Taser, etc. So his as part of the company initiation, you have to get tasered yourself. It never brings me it never ends bringing me a lot of fun, laughing, and joy seeing your own mate getting tasered. But more importantly, okay, we're interested in, right, how is this impacted in terms of the share price? And as you can see, this is a weekly chart, and from being down here, okay, sort of $80 a couple of years ago, we had been in a pretty excellent trend, hadn't we? And we'd gone from being here, $80 to $800. I mean, that's quite some run, isn't it? I was a bit worried here at the double top with the key reversal there, but we pushed higher to 800, and then we put in this, what I could only say is kind of I wouldn't actually call that necessarily a double top because of the nature of it. If anything, probably more like a bit of a sort of head and shoulders pattern on the weekly chart. But you can see there, from being 880, all right, tickling the soft underbelly of $880 over the last few months, we've had a real kind of collapse in that price. And it's kind of, the way I would look at it is, we've gone from sort of almost like a mini head and shoulders to almost like a macro head and shoulders, if you can see that. Okay, and certainly this year we've had a real collapse there. Okay, so we've gone from 880 to basically $400, in the last 6 months. And it's kind of interesting because if anything, as well as the Taser, they do like body cams, etc. You would have thought that with everything that's going on in Minnesota and other parts of America and the world, that basically there would be a huge demand for Tasers and body cams, etc. And if there are, that is not being reflected in the share price, is it? That price is there and stuff. And so, for me, they are. I'll be looking at them. I think they have. As I said, $400. I'll be looking to see, can it hold above $400, that big round number? Is that an area where it can bounce from? Okay, even if it's just a bit of a dead cat bounce, you'd be looking at it. But equally, if it breaks 400, well, then, I would be looking at this kind of block here. Excuse my drawing, but you get the gist. You're looking in towards that sort of $300 area, isn't it? That's quite some move, okay? Quite some move and stuff. So as I said, I'll be curious to see how that plays out around the $400 number. Yeah. All right, so let's just clear this down onto the next one. Next one is Hood, okay, or Robinhood markets, okay. I'm interested in these because, well, invariably, this is part of the business. Robinhood, okay, an American broker, a great deal on the kind of option side that they were looking at, kind of retail brokerage, right? Leverage to trading activity, kind of options volumes, crypto participation, and it has in the past benefited from the kind of improved rates environment on cash balances and some kind of retail engagement. Now, Hood probably came to most people's kind of awareness during the COVID lockdown when everybody got locked down on furlough and everybody was trying to sort of make money trading markets. And then it had a bit of a fell out of favor. And what we can actually see then, well, once again, you've gone from, an area of $10 a couple of years ago up to $150. This is, I would look more as like a double top here, okay? But once again, you can see that invariably we've gone from $150 to basically last week, $80. All right. Okay. We closed above it. All right. 82. But that once again, you're effectively almost like, halving the price over the last 6 months there. Okay. So, what the hell is going on there? What we do have is they've got their earnings Tuesday after the close. I'll be curious to see if those numbers are good, all right, and then invariably do we bounce off 80, at least from 80 back up to 100? Remember, we have a gap here. I've been keeping an eye on. But if those numbers are poor and overall sentiment is poor, well then, I'm looking at 80 breaking and then down towards the $60 area there. That's what I'd be viewing at. But as you can see, that has been quite some shift. And this is purely speculative on my part. You wonder whether that is a reflection. It's almost like a reflection of the Bitcoin price, all right? As Bitcoin went crazy, so did Hood because everybody was probably on there trying to trade crypto on it. But as as kind of crypto has rolled over, so has the Hood, and maybe there's a distinct mark there. I'm sure there are fundamental guys better than me that could basically work out whether there's any real true correlation going on there. But it's quite hard to keep an eye on and see how their numbers are tomorrow. Next is Ford Motor Company. They too are got their earnings after the close, and the reason I'm kind of interested in this is that most of my friends are real petrol heads. I'm not myself. I find cars a bit slow and two-dimensional for me, but there you go. But my friends are they're all absolute utter nutter petrol heads, okay, and so they're constantly banging on at me about cars, and I'm actually always just looking at right, well, where's the opportunity? And what I was fascinated by was over the last week, well, the last couple of weeks, what we have seen is that a lot of these major companies like Ford and a couple of the others we're about to look at have all had to sort of endure massive write-downs on the, let's say, the complete failure is too strong a word, of their EV, okay, parts of their business. And what we can see is that there's been some huge write-downs, and Ford came out of this last year, and invariably this is probably what we saw here is that when we saw kind of price here, $10, okay, $10 was acting as real support, and then basically last year we kind of came through that. That is what they call a Vulcan setup there, a really nice reversal of $10, and actually once they had announced sort of kind of admitted that basically the EV business was nowhere near as basically as strong, okay, as they had hoped, and that basically they were going to have to continue to basically sort of defend their cash flows from sort of combustion engine vehicles. It almost actually it kind of helped their share price, and so it's kind of gone from $10 up to just underneath $14, which is where, as you can see, there's clearly been a sort of a level of resistance there historically over the last few years, and we're underneath this now. It has actually been really quite a nice trend there, okay, since the sort of Liberation Day lows. And I'd be looking at, well, okay, are the numbers good enough to get it above 14 and hold, okay, as part of a move higher? Or does I say, are the numbers poor? Or is the sentiment overall in the market poor? And does that sort of kind of rug pull it at 14? So I think people will be looking to sort of see, what the balance sheet is like tomorrow, okay, and also I think, and maybe this is just me, look to see what if any guidance is given around the profitability of their EV element, if there is even any. Okay, so because I'd say the tone and the sentiment has turned against it, and so kind of disappointment on that tends to outweigh kind of any good news on the legacy side. It is a real, it is a kind of tale of two stories there with Ford at the moment. And then there's obviously a bit of a car theme this week. Okay, this is race. So Ferrari, this is the sort of US listing of it, weekly chart. And once again, okay, as you can see here, had been in a really nice weekly trend. There's a nice there bull flag there. Okay, it's just part of the weekly chart. A very scrappy, scruffy one. I think people would have struggled to trade that. But then invariably, what we do is we got into a block at $400, and we were kind of, as you can see, probably in this range, $400 to $500 for the last 2 years. Every time it got up to 500, okay, area, we can see that it basically real resistance there, isn't it? Just not interested in going any higher, and that, for those people who actively trade, okay, you will have options on equities, okay. There was kind of, there was a put trade, a beautiful put trade there, wasn't it? It's just to do that. But then equally, what we did see is, as I said, we had kind of support at 400 until we didn't, until that kind of bear flag broke. And now look where we are. Okay. So realistically, over the last 6 months, we've gone from like $500 to sort of, we're trading there at what's that, $333. That's a significant drop. Now, as I said, I am not a petrol head, but my friends are, and I will watch a bit of Formula One. And you have to wonder, is this also a reflection of their basically, is this a reflection of the market for their let's say their high end cars? I always think there's a market for those high end cars, but I could be wrong. I'm not an expert. Is this a case of basically like we just spoke about with Ford? Is that Ferrari they're kind of they're a legacy automaker, and this drop is a reflection of how well or how poorly they are transitioning across to EVs, all right, in terms of both I'd say the macro and the micro being their own kind of transition, but also the bigger macro picture as we talked about. So, once again, all right, it is going to be a case of I'd be looking at this is sort of um, for the numbers, okay, because their numbers coming out tomorrow before the market. I'd be looking at that in a case of kind of any indication of sort of softening demand or kind of compression of margins. That what I suspect would weigh heavily on the share price. Okay, so watch to see how they react after the news tomorrow. Okay, and talking of that kind of that sort of EV guillotine, all right. This is Stellantis, all right. So they are kind of, if you don't know them, not aware of them, a kind of automotive group across Europe and North America. And they, as you can see, they've really sort of been hammered by kind of the costs of transition to EV, the increased competition from China, and it also say like kind of mixed brand execution. All right, so they are made up of various car brands. And you might say, well, who's ever heard of Stellantis? Who buys Renaults, Nissans, etc., etc.? As I said, I'm not a petrol head. Okay, all I'm interested in is how have we gone from this place here, okay, of being in this trend up to $29, just under $30. And then within those 2 years, well, we're basically down here at seven. And effectively, we had a 25% drop on last week. Okay, I think Volvo's numbers were. I think Volvo lost about 25%. All right, Stellantis lost 25%. As I said, because of this information coming out on terms of the size of the write-downs, and I think these guys have had to sort of swallow a $26 billion write-down on their EV business. It has been an absolute story for the ages. It'll be in MBA sort of textbooks undoubtedly about how loads of these legacy automakers got led a merry dance by politicians wanting them to buy EVs, but actually finding that there was no real demand in the market. This is a battle between politics and the market, and as you can see, the politicians might have won here, but ultimately, the market took its revenge here. Okay, in terms of where that demand is, it just isn't there, and the demand that is there, a lot of that is propped up from government subsidies, and with government struggling, will those subsidies, can they kind of maintain? I would suggest. I would suggest not. All right, but that is quite some chart there. Okay, isn't it? That's quite some impressive collapse. All right, so especially if you like shorting things. And finally, for today, before we switch across to the live markets, McDonald's. All right, Mackie D. As I said, there's a lot of companies with earnings. A lot of interesting companies, but McDonald's, they are Wednesday before the market open. What's the interest here? Well, I think personally, it's a bit of a defensive. It's a bit of a defensive stock, is McDonald's. All right, and of course it has. It's franchise driven across the globe, so it is, I think, a good indicator of overall kind of global demand. Um, what we saw during the last crash in the GFC was that actually McDonald's basically, their share price rocketed because basically people were struggling and they were resorting to eating McDonald's. Furthermore, people were paying for the McDonald's on credit cards. Okay, so they're having to pay for their lunch, which they're having at McDonald's, on their credit cards, and so that was giving us great indication into the stress of the overall system. This time, McDonald's, because of the cost of living, McDonald's is not cheap. It is not necessarily the cheap option anymore. Okay, I mean, you know, I eat in McDonald's once a year, okay, and it's normally a pretty miserable experience, and it reminds me why I don't eat McDonald's, okay. But it's not a cheap experience anymore, okay, especially if you've got families and such. So it's kind of an interesting view on the kind of health and the strength of the economy, and for the most part, all right, for the most part, you might say, well, well, we're $300 here, okay, and sort of $250, and we've been in a kind of a range. If you're a range bound trader, this is your bread and butter. But actually, we've probably kind of what I'd say we've kind of worked up to that range. Here we go. Excuse my drawings, as I say, I'm a better trader than I'm an artist. That's almost like an ascending wedge, an ascending triangle, which we broke out of kind of last week above $320. So I'll be kind of looking to see, what they talk about in terms of the trends for the traffic. Okay, so because as I said, they can only do so much in the pricing, and if consumers start kind of trading down, all right, in terms of where they choose to go to eat, because as I said, McDonald's is not the cheap option that it was 15 years ago, 30 years ago. It is not. And as I said, it's an indication of kind of the overall trends globally and then within the US. So hence why it's kind of worth keeping a bit of an eye on. All right, so there we go. Some charts of interest that you can add to your watch list and see how they play out this week. Let's switch across to the live markets. We're going to overrun a bit here, but that's because there's just so much going on and so much to discuss. Just bear with us a second. What we'll do is we'll take a look at the live markets. All right, so here we are. This is just a profile of indices. So what have I got? Dollar index, Nasdaq, SP 500. and the Russell, sorry, the Dow, not the dollar index. We come to that later. Oil, DAX, Nikkei, and FTSE. All right. So listen, Nikkei, as I said, we'd already had a bit of a pump, and actually you can see for this week we started off well, but I've kind of fallen back. That's a week again. We're only halfway into Monday, so not too fussed about that right this moment. We'll see how it plays out. What is of curiosity is, even though we talk about kind of stress in markets, the Dow closed above 50,000 last week. Okay, you can say what you like, all right, but from being here at 36,800 and Liberation Day to closing above 50,000, that is just some trend. And as you hear me say to traders and investors, markets don't trend as often as we would like, right? Okay, probably only trend 20 to 30% of the time. So when they do trend, you don't fight it, all right? You find a way to ride it, okay? You find a way to basically work with it. Don't fight good trends. They don't come around as often as we would like anyway. But interestingly, whilst Dow was closed above 50,000, what we have talked about here is that, NASDAQ has not really done that, okay? NASDAQ, we talked about this over the last couple of weeks, that, there's a kind of, some might say, a bit of a triple top there, a double top. I was talking about how the 20-period moving average was acting as support, but then last week we can see we closed beneath that 20-period moving average, which we haven't really done since what that would have been April, May, yeah, sort of kind of time of last year. So, I mean, as you can see, it was a pretty wild day, and a lot of that was due to some of the earnings we saw from some of those Mag 7 stocks and just the general overall kind of nervousness is probably a good word on that with the Nasdaq. So now we'll be looking to, well, actually, are we going to get followed through? Certainly on the daily chart, all right, we're beneath that 50, 20's across the 50. Yep, we had a bit of a good bounce on Friday, but I'd be interested to see, is this just a little bit of do we flow up and then drop lower? Okay, with some of the data coming out later this week. Okay, is that kind of rug pullers or pushes higher? Certainly S&P, all right, had the similar sort of what I would look at as like a high wave candle. It's still closing beneath 7,000. The Russell had a good week. Some might say, well, Paul, isn't that just a kind of a version? Here we go. Isn't that just a nice weekly bang bullish flag? All right, and I wouldn't necessarily fight you on that. As always, I'd want to see, what kind of follow through do we get when we're actually here at the highs? And as I said, maybe the kind of the sort of jobs numbers later on this week might give us an indication on that. Nikkei, as I said, had already run. DAX having broken out. This is the DAX weekly, having broken out. It's kind of fallen back a bit. It's holding above the 20. It is holding above the 20. Okay, is this a chance for it to pull back before it pushes on? Well, we'd need to see some good data, okay, out of Europe. All right. Yeah, good luck with that. All right. Close to home, FTSE, once again, regardless of what your feelings about the government or the state of the economy or what's going on in the world, the FTSE has ground its way high, and it's done that off the back of being like a kind of an anti-US, anti-Trump trade, okay, also kind of weakness in sterling. But even with all the shenanigans going on, we continue to push higher. Last week, yeah, okay, we've started off. If I go down to the 30-minute chart, okay, this was this morning's session. We've kind of drifted lower. No real surprise there. Nice double top with a key reversal and drifted back down onto that. No surprise with that, but it continues to push its way, doesn't it? Having a look at some of the commodities, gold. Gold was a bit of an interesting week, having had the sort of shenanigans of a couple of weeks ago. We dropped, but then we pushed up. So, you hear me say, when you get like hammers, shooting stars like this, okay, on both sides, it's almost like they're clearing out orders, all right? Clearing out orders, clearing out all the weak hands. If I go down to the daily chart, we have stayed above the daily 50. We are, pushing up, all right, we're above the kind of daily 20. We're at around about the 5,000 mark again. Does it have what it takes to push back to those highs, okay? Or is this, as I say, is this just basically an ABCD pattern that's getting ready to move? If I'm honest, I don't know. There's enough uncertainty in the world that it could actually continue to push its way higher. But I'm at this moment as a trader, I'm happy to be led by what goes on in terms of, I'm not sort of predicting anything. I'll just wait and watch and see how that plays out. Let the market play its hand, and then I will sort of follow through accordingly. Kind of same with silver as well. Having had that kind of parabolic run up, we printed that bearish engulfing candle. Last week's is a bit of a high wave candle. It's an indecision candle there. Okay, if we go down to the daily chart, by the skin of our teeth, we stayed above the 50. Today we've pushed about 80. Once again, I'm looking at, I'm happy to watch that to play out a little bit. I know investors would have been saying, well, I'm buying the dip. That's fair enough. But as a trader, I'll be waiting to see, what the real what the real direction is, and then I'll look to ride that afterwards. Bitcoin in the weekly, as I said, a bit like the HUD chart, the kind of chart HUD, we went up and then we've come all the way down, and that's not massively dissimilar with Bitcoin. We had last week, we kind of fell through and we were tickling 60,000, but kind of bounced back. And if I go down to the daily chart, the daily chart, we had a real strong sell off. Yep, we bounced back up. 70,000, okay, is where we're kind of pivoting around at the moment. We're a bit beneath it today, but of course, we'll have to wait and see what the Americans do when that opens up. But invariably, that trend is down. That is, that is STAM 1S, okay? So you're looking at those reflections on that. How is that being reflected in US dollar? So as I said, I appreciate overrunning a little bit today. So we'll have a look at the kind of just dollar, yen, and sterling as always, just to basically pay up. You can see I've got loads of platforms open here at the moment. That's why I'm taking ages for things to upload. Okay. So here we go. US dollar, Aussie dollar on the daily, Euro dollar on the daily, pound dollar on the daily, dollar Swiss daily, Kiwi daily, dollar CAD, dollar yen on the daily, and the dollar index. Okay, so I'm going to have a start with FX pairs. Let's bang and just dollar index. Okay, we came down weekly. We flushed those lows of 25. We bounced off of it. I thought we might kind of grind our way back up to sort of this 98.50 area. I thought where the 20, where the 50, I thought we might grind our way, but no, that's not happening. Woulda, coulda, shoulda. We can see in the daily chart, we really did, as I said, flush those lows and bounced off it nicely, but we can't seem to get above the 20, can we there? And, today has been, as you can see, that kind of selling in dollars accelerated. 4-hour chart, let's go out a bit. 4-hour chart, there was a scruffy bottom there, okay, off those lows of last year, but then worked our way up to 200. But as you can see, we've dropped our way through there, haven't we? Dropped our way today, and that's that kind of dollar weakness is, and that's why, well, as we'll see, that's why sterling hasn't tanked as much, because actually most of the focus is still on the dollar. Aussie dollar here is kind of an interesting. Here you go. Excuse my drawing, because Aussie, remember, is top of the STAM. Dollars the lowest, but actually, you can see we've had a few weeks of scruffy, but maybe now we're starting to get a bit of more Aussie strength and kind of dollar weakness. The same with Kiwi. All right, same with Kiwi. If we are going to have flag patterns, I like to see them ended normally by either kind of an engulfing candle or a pin bar. That's what we've done so far. Dollar Canadian, okay, is kind of drifting its way. Euro is drifting its way up, okay. Pound we'll look at, even dollars drifting down against Swiss franc, okay, and also against Japanese yen. So, we can see there that it is dollar weakness. Right, we're starting the week with a bit of dollar weakness. Whether that will continue after the news, we'll have to wait and see. But at the moment, tactically, I'm looking at that. That is dollar weakness, okay, and I'll look and see how can I take advantage of that. All right, this is my yen profile: dollar yen, euro yen, pound yen, Swiss yen, CAD yen, Aussie yen, Kiwi yen, Nikkei. All right, my new Nikkei put, as we've said, dollar yen. Okay, we've seen a little bit of that dollar weakness, yen strength. CAD yen, which the last couple of weeks, okay, CAD has been weak, but it's still managed to strengthen against the yen. Aussie against yen has been picture perfect. Okay. VTP stage 2 STAM, buying strength, selling weakness. Even euro yen, we bounced nicely off the 50 and continued to work its way higher. Even pound yen, with all its shenanigans, kind of ground its way. Swiss franc, Japanese yen, that is once again, buying strength, selling weakness. And Kiwi, all right, which is in third place, that's kind of been buying strength, selling weakness. The question is, will that continue? Will basically Takichi want to keep the yen going lower, or will we see intervention from the Bank of Japan? If I'm honest, I don't actually know, and right this moment, we're going to have to wait and see how it all unfolds over this week with regards to Japanese yen. And then let's finish with sterling. All right, finishing with sterling. Pound against dollar, euro against sterling, pound Aussie, pound Canadian, pound yen, pound Swiss, pound Kiwi, FTSE. All right, FTSE's arsing around. Cable. All right. Like we just said, even though sterling has been weak, it drifted its way off, but we've actually basically the last day or two, Friday and today, we've had a little bit of sterling reprieve. Okay, as I said, that is more to do with the dollar than anything to do with sterling. Okay, I mean that's the 4 hour chart. 4 hour chart from the other week. We had a really lovely double top, worked our way down to the 200, and have bounced our way back up. Okay, interestingly, there's kind of a bit of a happening going on there, but we've already shooting our way. Okay, and as I said, that is more dollar weakness. Pound against the yen, as we said, I still think we're building a diamond here. Okay, so as you can see, it's a broadening formation, which once again, as I said, broadening formation is you're clearing out lots of stops, and that's what I think is probably what we're going to see there. Okay, as we get an indication of you're effectively you are getting political certainty in Japan. All right, with Takichi winning a super majority, and you're getting political uncertainty in the UK with Starmer. People not even sure if he'll make it to the end of the week. And I suspect that is why we're getting that kind of volatility in pound against Japanese yen. Pound against Swiss franc on the daily chart. Well, we can see, Swiss franc remains in second place in the STAM, while sterling is kind of slipping down into fourth, fifth, sixth. That's kind of reflected in that. Okay, there's the reflection there. Okay, of sterling weakness, Swiss franc strength. That's I don't want to fight that. I want to ride that. Aussie is still top of the pile, isn't it, in the STAM? And that's just reflecting it. That is, sterling weakness, Aussie strength. You don't need to make these things harder than they have to be. Okay, just identify where's the strength and where's the weakness, and look to flow with that. Okay, lots of traders, and myself included, we try to overcomplicate these things. Okay, and try to be smart asses when in fact actually we just want to identify where's the strength, where's the weakness, and look to flow with that. Euro sterling is a mess, all right, and has been. But as you can see, the kind of instability in the sterling, where we're looking at this is the daily chart, was looking at big channel, but the kind of instability in the sterling has basically showed a bit of a pump to euro. Okay, that's what that is. That is political instability in sterling is more of a basket case than it is in Europe, and so that's why we've seen that bump. The question is, I don't think the trend really changes until you get above the 50, the daily 50 there. Has been a really nice resistance, but it has to get above it and hold above it to give me an indication that basically those markets have changed. All right, there you go, ladies and gentlemen. I apologise that we overrun by quite a distance, but there was a lot for me to share with you. All right, a lot's going on at the moment, as I said earlier. Okay, make sure that you're on top of the news flow this week. Make sure you're on top of order flow. Make sure that you are managing risk. Okay, as always. I hope you have yourselves a fantastic trading week. Okay, there will be opportunities. Just need to be patient and look for them. And as I said, I look forward to seeing you in 2 weeks' time. Okay, I won't be here next week. It's the half term here. Okay, in the UK. Okay, I will be looking around castles in Northumberland. Okay, but for the rest of you, have a great couple of weeks, and I will look forward to speaking to you on the Monday market update in 2 Mondays' time. Have a great week, everybody. Trade well. Cheers.